The first things we need to do is that the restatement of the opening balances of the earliest period presented is before 1 January 2018. Adjustment entry. Let's call it adjustment entries. Enter IFRS 16 full retrospective method. Active approach. So we have the number one column here, and we do have the illustration, and we have debit and credit. So the first entry would be the right of use an asset. How much it is? So from the present value of lease payments, we calculated the right of use an asset at this amount. So we did the right of use an asset always equal the lease liability. So we do have the lease liability. Same amount equal to the debit side. We can make illustration to recognize right of use an asset, the right of use asset, and lease liability. The second entry, we booked the right of use an asset and lease liability. We need to reverse the lease liability payment before 1 January under IAS 17. So the double entry would be cash, and they were 2 years before 1 January 2018. Were 2 years, 2016 and 2017. From the lease liability, they would be under the IAS 16 these amounts, and the 2017 were paid. So as long as we are reversing this amount, and the profit or loss accounts for these 2 years already being closed, so we don't have the profit or loss accounts, and that's why we are credit this amount or reverse to the retaining earnings. To reverse interest of 2016 and 2017. The third entry, we need to account for the lease payments before 1 January under the IFRS 16. We are in January 2018, so we need to reverse or exclude this lease liability for 2 years. So the double entry or the entry would be lease liability, and we have retaining earnings. retaining earnings equity. And on the credit side, we need to credit as a cash. So the lease liability for these 2 years, this liability for 2017 and 2016 would be from here, from the lease liability here, this plus 2015 would give us 69,018. And retaining earnings, we have the interest. So the lease slab under the IFRS 16, the lease payment is split out into the interest rate, split out between the lease payment and the interest. So how much the interest for the 2 years? This interest would be this plus this. The credit side would be the total of two interests to give us. So if you see in 2016 and 2017 under the IS 17, we paid the total of 120,000. Yes. And under IFRS under IFRS 16, so the total would be the interest charge plus the short-term lease liability will give us the total of these 2 years. So we need to make I can write a little bit, we can write short narration to book lease liability and interest charge or finance cost, finance cost for 2016 and 2017. Another things also need to take care of that. We have the depreciation. So the right of use an asset should be depreciated over the lease terms or the economic useful life of the underlying assets, which one is shorter. So here we do have the right of use an asset is depreciated over 10 years, and we should account for the depreciation of the right of use an asset before 1 January 2018, and they were 2 years. So the depreciation instead would be we need to decrease the right of use and assets by depreciating or the charging the depreciation amounts. So the depreciation would be, normally the depreciation charge would be charged in the profit or loss, but we are doing the interest for the 2016 and 17, and these accounts, as I said, already closed. So we need to charge the depreciation amount into the retaining earnings. So 4 would be depreciation, retaining earning. We debit the retaining earnings. Retained earnings. And credit the right of use and assets. How much the depreciation for the 2 years would be? Depreciation in the depreciation here, 2016 plus 2017 would give us the 321, the right of use and assets equal on the credit side. So we can write the short narration. Depreciation charge. Depreciation charge of 2 years. 2 years. The 1 year for 160.0.5 into 2 years. This 2 years is 2016 and 2017. So we have done with the depreciation. So these are the all entries for the restatement of the restatements before 1 January. In fact, practically we can make one double entry for all these 4 entries. Just I have done this to show the breakdowns over the entries. So let's make one double entry. It would be the total right total. So the right of use and assets would be the total right of use and assets amount less the depreciation charge for the 2 years. So that would be equal debit side right of use and asset, this minus depreciation for the 2 years earnings. So this is the right of use and asset, and we need to charge the difference that comes from the applying the IFRS 16 equal these 2 years from the comparability. We have difference here debit and difference here debit. Give her this thing, and the lease liability would be to the remaining lease liability. So the remaining lease liability would be this plus this. I think we should stop here. Thank you so much for watching. Bye bye.